but YouTube is the only one that I actually know how to work. So
Heard that.
we're apparently live.
Oh, okay.
So
Fantastic. Well,
uh,
then we should probably start talking about stuff.
yeah. Let's see if anybody joins us.
Okay.
Uh, but yeah, fun to talk crypto with my skeptic here. So
Yeah,
what?
skeptic might be a little bit of a harsh way to put it. Maybe crypto burnout? S-
Ooh, okay, I like that. Explain.
There's just so much going on. So much going on in 2021, and you knew that most of it was probably not going anywhere. And then a lot of it did go nowhere.
Hmm.
And so we're in this weeding out phase. It's just mucky. And I think I got tired of waiting in it.
Yeah, I mean that's totally fair. Um, and I think in our discussions too offline, I'm I think I'm more excited about the process. Maybe
Hmm.
is one way to think about it than you are. Because I'll send you notes about, hey, here's this cool thing that's going on, and you're like, how the hell do you keep track of this stuff? Like, what are you doing, you psychopath?
Yeah.
So, yeah, but I mean, that's what's tough, and that's why people are leaving when the money flows out.
Hmm.
It's tough to stay excited. Well, for those who join us and for the recording that will go up on YouTube, why don't we just do a quick introduction? So my name's Travis Hoyam. I've been investing for 25 years now, and got into crypto about almost exactly a year ago, and started the Rive project, which is the YouTube channel, and then I also have a newsletter. Was really intended to cover the business side of things in a way that I didn't think was being covered. So, kind of a more serious way of looking at crypto rather than like, here's the hype project that's going on. I mean, we'll talk about Aptos in a
Yeah.
little bit, but like, what's the next hot thing and what's the meme? And my view on crypto generally has always been there's something real here, and I want to figure out what it is,
Hmm.
and I don't know where that's going to lead me, but going through this process and learning and sharing and getting other people's ideas and seeing what people get excited about and what people don't and what people are actually using, trying to pull data in where I can to make seemingly logical arguments, I think, is what's really exciting about this space, because I do think that this is technology that we're going to be using, whether we know it or not, in the future. And so, the analogy always is that this is the internet in 1995. And if you knew how to write a web page and you knew how to get online and you knew kind of how to navigate the internet, then it put you in a much better position in 1998 and 2002 and all these times as an investor. So I do always have that investor mindset. I know that some people in the crypto space think it's all about art and stuff like that. And that's great. But I do think that there's like real businesses that are going to be investable. And we're in this weird gray area. And so that's what the Rive stands for, or means explosive disruption. And I think there's going to be a lot of disruption coming from the world of crypto, whether people even know it or not. Um, and so that's what I want to explore. So that's what the Rive project is all about. And I've got a newsletter that I put out periodically covering NFT projects and kind of interesting things that are going on. It's content that doesn't really fit in the Motley Fool universe, which is kind of both of our day jobs. And then here on this channel, I try to cover that that intersection between disruption and investing, and how do we make sense of all this. So there's my diatribe. John, tell me a little bit about yourself.
Yeah, I like a lot of the things that you just shared there, Travis. And I would say, well, just generally, okay, my name is John Quast, and I've been investing for maybe about 10 years, so much less than you, Travis. And we've talked before. My early days of investing was discovering Fool.com, by accident, really, and stumbling across a lot of articles that really piqued my interest. And a lot of your articles were the ones I was reading at the time. Very interested in solar at the time. You were a big writer in solar companies back then, still are. But yeah, been investing in stocks maybe for about 10 years, but cryptocurrency since about 2018. I believe that was when I made my first purchases of both Bitcoin and Ethereum in equal amounts, just 50-50 portfolio there. And the reason why, very similar to what you're talking about, I studied enough of it not to understand it completely and to say that I'm going to set up my own mining rig in my home. I didn't know all of the ins and outs, but I had researched it enough to realize that there is something in this
Mm-hmm.
space. I don't know what it is. I don't know where it's going to go or what the ripple effects will be, but definitely it's not nothing. What really convinced me that it wasn't nothing was when, you know, Bitcoin fell how many times? 90% or more, only
Yeah.
then to go back up to all time highs and all time adoption. So, not just the price is going up, but you're seeing more people getting into the mining and more people joining this network. It's like this is happening even though the price is dropping at times 90%, just completely crashing, and yet it's still
Mm-hmm.
going on. This isn't just a fad. This is something that has something to it. And so, to me, the most logical, if cryptocurrency is going to be a thing, at least this is how I was looking at it in 2018. If this is going to be a thing over the next 10 years, either Bitcoin or Ethereum is probably going to figure in somewhere. So I'm going to buy 50-50 of that because all the other altcoins at the time just really didn't know how to make heads or tails of what was real and what wasn't. So
Yeah, and
yeah,
there's a lot.
just curious, you know?
Yeah, and I think that's the way to come into this space. I mean, anybody that talks about crypto like they know what's going on is just turn it off. Like mute them. We're all figuring this out, and I think even the leaders in the space who are honest and will ask questions and be trying to figure things out in public. I mean, I think Anatoly, who is one of the co-founders of Solana, is really
Mm,
interesting to follow on Twitter because you can see the process happening kind of live of
yeah,
the way that he's thinking about, okay, what do we need to build for this blockchain to be what I think it can be in the future. And that's really interesting and encouraging if you have a view of the crypto world like I do, that we're actually going to be using this to do stuff and not just store value. That's one of the reasons I've never understood Bitcoin. I think I missed out on that for a really long time because I don't get it. I don't get gold. I don't get Bitcoin as a result. I just don't. If I want to store value, why wouldn't I buy real estate? That's
yeah.
actually a real thing. But anyways, that's another diatribe. Well, I'll try to be respectful of your time. I think we had a couple things we wanted to talk about. I'm gonna let you play the host role, even though we're on the Rive Project channel, and we'll chat about a couple interesting topics here.
Yeah, and definitely, and I am really going to enjoy this from a learning perspective because I think that I have a lot of the questions, and hopefully you have a lot more of the answer than I have. But
we'll
specifically,
we'll try to figure it out together.
we're looking at this bear market, and I talked about maybe just having some crypto fatigue. Personally, I haven't followed the ins and outs for a few months now,
Hmm.
not keeping up with the news cycle. But I do know enough to know that we are in what would be considered crypto winter, if you will, a bear market. We are in a time where the activity is dropping, at least on NFTs, the trading volume, right? And then the prices of cryptocurrencies are falling across the board. We're in a bear market. And one of the things that you were noticing was that maybe decentralized finance, DeFi, holding up relatively well.
Yeah, and I think so. To kind of explain what I'm saying by that is the failures that happened in, I think June was the big month where a whole bunch of stuff blew up, right? That was the Three Arrows Capital, and then there was kind of this cascade of Voyager and I forget the other one that went down. Those were
Celsius?
yes, Celsius. those were not actually decentralized finance in the blockchain term. That was really more like a bank that was taking risks that weren't on the blockchain,
Hmm.
kind of hiding those risks from people. And then when things fell apart, you went like, "Oh, we don't actually have your money to give you back." I mean, that was why Celsius went bankrupt.
Yep.
And the protocols would be the terminology to use. So basically, the decentralized finance that was actually programmed, where like let's say that I have an NFT that's worth $100,000. There's a big protocol for lending in for high end NFTs, so like Bored Ape Yacht Club NFTs, and you can go out and say, I have a Bored Ape Yacht Club NFT that's worth $100,000. I want to borrow $50,000 against that. And then there are rules, just like there are in the stock market, where that says we're going to pull data from LooksRare and OpenSea and a bunch of other markets and figure out what the floor is. Basically, if we had to liquidate this right away, what could we sell it for? Then we're going to give ourselves a margin of error. And so, excuse me, if the value of the NFT falls to, let's say, $70,000, we're gonna just we're gonna give you notice, but we're gonna take your NFT
Hmm.
and we're gonna liquidate it. And that's the way that a mortgage works. Like if you stop paying your mortgage,
Hmm.
it works the same way. They take your house, but they don't take it like right now. It
Hmm.
takes months to go through that process. Same thing with a car, right? You see, like, you can probably look up on Twitter people just having their cars taken out of their driveway because they didn't pay their bill
Yep.
for a period of months, and that's how you repossess a car. In crypto, when we're talking about digital assets, the digital asset is on the blockchain, and the contract that you signed is on the blockchain. So all of this happens automatically. And so that doesn't mean that there isn't risks, but it means that the the risks can be understood in a different way and programmed into the decentralized protocols in a different way. Now, sometimes those protocols get it wrong. There was one. I mean, the Bored Ape Yacht Club one was a good example where I think their margin of safety was not as high as they thought it should be when things kind of really started to drop.
Hmm.
And then they made some changes, and things went back to normal, and it was okay. But none of these protocols like went bankrupt.
Gotcha.
And I think that is a really interesting outcome from this, because I think there really are advantages to decentralized, what we kind of call DeFi, being on the blockchain and working in a programmatic way. Um, and it didn't lead to this cascade. It wasn't like a Lehman Brothers moment.
Yep.
Three Arrows Capital happened. Guess what? Them and Celsius had to pay back the DeFi protocols to
Hmm.
get their collateral back. That's who made their money back, was the DeFi protocols. It was the people who didn't have any collateral, who just put their money on Celsius and said, "Oh, you're going to pay me 20% interest? Awesome. I will take that." They were the one that lost their shirt because there was nothing backing that up. But the money that they borrowed from other protocols, and they said, "Hey, we'll give you our Bitcoin so that we can, you know, borrow money to do other things." Um, they got their money back because they were holding the Bitcoin and saying like, "No, we're not gonna like, we need this back. This is the deal. This is the contract." So I don't know if you had anything to add there, but I think that's an interesting takeaway over the last 6 months or so, is that the crypto world didn't collapse, and is because a lot of these contracts were on the blockchain.
Well, I guess what comes to mind is that, when you're dealing with a person on the other end of a contract, that person can do things, right? And they can act within the bounds of the contract. They can try to do things outside the bound of the contracts. There's loopholes, there's all sorts of things, but a computer, what you're talking about, I mean,
Yeah.
we're programming these contracts. It, it's very objective by the terms of the contract. Depends on how well the contract is written, I'm supposed. But you have these people, like these subjective parties that you're working with. you're putting your money up there and they're promising you one thing, but that promise may not come to fruition. That is what we're seeing get flushed out. That's what's failing. But what you're talking about is these computer DeFi, like truly decentralized. This is not
Hmm.
a person on the other end. This is a computer, and the computer is going to follow the code. That is what is proving to work.
Yeah, and to just compound on that, and this is the kind of stuff that gets me excited for the future. Think about contracts. Like, why can't we move a huge chunk of contracts onto the blockchain? So now it's not on a DocuSign document, and now I have to take this document to a courthouse to get it enforced, to get, whatever, whatever. Like, I just think I am of the opinion that the blockchain is going to really open up advantages for people trying to start businesses and then invest in businesses. The SEC is really having a hard time understanding that this might be a good idea. That NFTs could actually be a security, heaven forbid.
Mm.
Um, I think eventually we will get to the point where, you know, John Quast wants to start Quast Crypto, and he says, "Here are the things I'm gonna do. I want to raise $20,000. I'm gonna sell these NFTs. Here's what you get for that," and you write it all in a contract, and that contract goes on the blockchain. And then me as an investor, I can say, I either want to buy that or I don't.
Hmm.
As opposed to now, if you want to go out and start a business and raise money, first you got to go to a lawyer.
Yeah.
Then you got to find investors. You can't just like put out a tweet and say, "Hey, I want to raise 20 grand. Who's got some money?" Because you have to find the right qualified investors, and they have to be friends and family, or they have to. It's just it's so convoluted, and we can get to the point where, especially if you're building a business that is on the blockchain in some way, shape, or form, and there are examples of that. Why not fund that on the blockchain and have programmed in there this amount of money goes to the DAO or goes directly back to NFT holders or whatever. I mean, the options for business models could be really vast. We aren't there. That's not what we are doing today in most cases with crypto. But I think the DeFi, what happened with DeFi this summer was really telling that this can work
Hmm.
if we do it well. So, my opinion, maybe we won't get there, but
Well, you
hopefully.
kind of alluded to it a little bit here, and so maybe we should just dive fully into it. NFT business models are evolving during this bear market, and I don't know what I don't think that many people think about NFTs even having a business model when when they're thinking
Right.
about it.
That isn't what most people think. But there
But
is the ones that are serious have a real business model. Like they're really
Mhm.
trying to do something. Like apparently the Board API Club wants to build a metaverse. I don't know that that's why people were buying Board API Club NFTs in summer 2021,
Yeah.
but apparently that's what Yuga Lab wants to do is build a metaverse. So that's their business model. You're going to have some asset in the metaverse.
Hmm.
There are other examples. I did a article on Anybody's, which is an NFT project that's using NFTs to represent both. If you mint one of their partnership NFTs, you get both a real life good. So in the case of their last drop, it was a sweatshirt, and you
Okay.
get a metaverse good. So you get something, uh,
Hmm.
both a physical asset and a digital asset that you can attribute whatever value you want to that. But that's I talked to the founder, and what he said is you can get even big brands really excited when you say we can sell out a 10,000 unit drop in 3 minutes. Like,
Wow.
that's what I equated it to is like the Nike sneakers app where they go, "Hey, we're gonna
Yeah.
we're gonna drop this a limited number of Jordan brand shoes, and that's it. You either are awake at 5 a.m. to buy them or you're not,
Hmm.
and you're gonna miss out." That's essentially what they're trying to do with. They just announced a partnership with Toys R Us. We don't have a ton of details about that, but um, there are benefits that the original NFT holders are going to get in the token that they earn, that you can then use at Toys R Us and buy a plush toy or whatever it is. And so there are interesting things going on there. The finance one is a little bit more straightforward. There's a uh, Helios is a NFT project that is building kind of like a Stripe type competitor, but on the blockchain. You can just go out and I mean, I think I have a link somewhere on Twitter, and you can send me USDC or Sol just as like a hey, buy me coffee. I think that's how I set it up. I was just like playing around with it. Um, but you can put a, a good out there instead of using Stripe and the underlying credit card infrastructure, which is going to charge you about 3% of that transaction. You can use crypto and NFTs, which is going to be far cheaper. I think eventually we're going to move there, and there are going to be interesting business models with that. And then the Helion's NFT has like a payback. So holder or the NFT sort of funds the business early on, and then they say, and we're going to contribute this percentage of revenue to the DAO in this case. So these are the business models that people are exploring. There's a Hive Mapper is you can get paid in crypto tokens to put this camera in your car and basically create a new Google Maps on the blockchain. I don't know. That's interesting.
So
Like,
let me circle back to Helios and make sure I understand this right. So let's say I have an e-commerce website.
mm-hmm.
So I'm assuming maybe there's an API plugin of some sort that I
Yep,
can accept payments on my e-commerce website, and then those payments come in USDC or maybe Sol or maybe some other cryptocurrencies. So it's
correct.
cryptocurrency agnostic.
It is on Solana. So
Okay.
if my memory is correct, it would just be Sol or USDC are the options.
Okay. But still, that's an interesting thing there. And then that, if you're looking at Helios as a company, they are generating revenue, albeit much less than what a credit card would be generating
Mm-hmm.
at 3% or whatever it is. But they are generating revenue, and that revenue is coming in. And if you own a Helion's and NFT, eventually you're getting royalties from that.
Right, right.
Interesting. Yeah,
Um,
that's interesting.
Yeah, and so I think what the last 6 months specifically has done is it's flushed out a lot of the bad NFTs. Um, the slow rugs, I think, is would be the best way to put it. The
Hmm.
projects that didn't really have a business model for generating long term revenue and actually running a business that's sustainable in some way beyond just like breeding a new NFT or updating your NFT with a different picture or
Yeah.
something, these kind of goofy things that a lot of projects did. Now they're starting to, the ones that are lasting are really building businesses in some of that software that is for sale. I mean, Blocksmith Labs is an example of that. I don't even understand their stuff all that well because I'm not a programmer.
Hmm.
People use that, and so that's the interesting stuff that's going on. I have doing a breakdown of Helions on my list of things to do, but Solana Pay is one that we've talked about since I
Yeah.
think February when that was announced. I mean, there's another great use case that um, that's effectively what the Helions thing is doing is creating a Solana Pay that's just on. It's like a digital only at this point. So, yeah, I mean, there's interesting things going on, and that's what I'm here to explore because something is going to be the next Google or Stripe. I mean, Google was started in 1998, and they tried to sell it for $1 million, and now it's $1 trillion company.
Hmm.
Like
Yeah.
something big will come out of this, but I don't know what it is or where we're going to find it. But if I'm digging, hopefully I can hopefully I can find something valuable.
It reminds me of something that you said at the start, like with Anatoly from Solana. We're seeing so much happen in real time, like we're seeing it play
Hmm.
out live. And that's something that we didn't have when the internet was being formed in its nascent days because you didn't have the internet yet.
Right.
So now we have the internet and we're so much more connected in all aspects. We're connected with friends, we're connected with strangers, and we're connected in daily real time. And that's not something that existed pre-internet. So as the internet is being concocted in basements and all over the world, you didn't see all these iterations and evolutions and thinking, okay, well, what are we going to do with this? And what about that? You didn't see that happening, but you see that happen in real time with crypto. And I don't know. I don't know if for some people that like seeing so much confusion and so much discussion and, uncertainty, I don't know if that holds some people back completely, but I'm sure it was no different from the early computer days, early internet days. We just didn't have a front row seat to it.
And money wasn't involved. I think
Mm,
that's the other really confounding factor is you had a bunch of people that came into crypto and money was the motivation. And
yeah.
I mean, if you were hyping chat rooms in 1995, like who cares? Like there was no money to be made. And now there is, and that's not always a good thing when you're developing something like a new technology. I
Mm.
just dropped a link to the Helio website on in the chat. So if anybody wants to look at that, I'll put that in the show notes as well when we publish this. But you know, it's an interesting project to look at because I think they're building something real.
Speaking of money, corporate money coming into the cryptocurrency space, even in a bear market.
Yeah, I mean, if you want to know why to start thinking about and learning about crypto and NFTs and the blockchain now, I mean, just in the last week, Mastercard, Starbucks, you know, Nike bought a NFT development company a few months
Yeah.
ago. Um, I mentioned the Toys R Us partnership with Anybody's, and I know of a couple of other things that they're working on with really big brand names. Um, Corporations are paying attention and they're trying to figure out how where they fit. Um, I put an article out for one of the Motley Fool premium services about there are a number of advantages. If you think like the Starbucks one, I think is really interesting to think about because right now Starbucks loyalty program is kind of its own little thing. You know, they have to do the development and they have the app and all this stuff. If you put it on the blockchain, now you put some of that development on the blockchain and potentially you can get people to now if I have a Starbucks NFT, let's use Solana because it's the one I'm the most familiar with. I have a Starbucks NFT in Solana. Now you know that I have a wallet. You also know that I probably have some crypto. Remember we talked about those credit card fees.
Mm.
Now I can just give you the option, hey, do you want to pay with USDC today or do you want to pay with a credit card? And as we move down this line, it's like Trojan horsing crypto's way into being really the rails that the economy is using. And for Starbucks, I mean, I don't have the numbers off the top of my head, but if they eliminated their assuming that all of their transactions are credit cards, which I assume a vast majority are, if they eliminated that credit card fee, their net income would go up like 60%. Like like margins on businesses like this. I mean, think about a grocery store. A grocery store is making like 2% margins.
Yeah.
They're
2%.
paying the credit card company more than they're earning in profit.
Mm.
You don't
Yeah.
think that a grocery store would be like, please, please use USDC, use crypto rails because it will
Yeah.
make me so much more money.
Yeah. I saw Walmart's chief, was it chief technology officer? I don't remember which one it was, but talking about how crypto is going to play a part in Walmart's future.
Yeah, and you look if they're paying attention, this is not a fad. And they're looking at this in very real ways. They're not looking at trading monkey JPEGs. They're looking at how can this help our business. And I think there's a lot of options. There's a lot of really dumb things they're going to try. To be really fair,
Sure.
because they don't know what they're doing, and that's always what corporations do. But the
Yeah.
fact that they're putting money into this and exploring is tells you should tell you everything you need to know about how serious this is.
Well, and somebody at some point, if enough things get tried, something that works well and that consumers like will be stumbled upon. even if it's by accident, somebody's going to come across this is where we're actually going to start going. And then once it starts working, everyone will emulate it. Like success, businesses aren't dumb. Otherwise, they wouldn't be in business. They see what's working with other companies and they will go that way.
And
So,
we
yeah.
also don't know where the point of value is.
Hmm.
I think I don't know the exact number, but there was something like 40 search engines built before Google.
Hmm.
So, there was a
Yeah.
bunch of attempts at this, and then they finally cracked it. I was writing an article trying to make sense of where we're going with this last night, and I went back to I remember in college, so this would have been the 2000 in about 2000, and chat rooms were all the rage, right?
Hmm.
There was nothing
Yep.
useful going on in chat rooms. It was just like, hey, this is cool. We can be on the internet and chat with other people around the world. Like that's just an interesting thing. Fast
Absolutely.
forward 10 years, WhatsApp is being acquired for I think it was $19 billion. Well, I mean, what is iMessage worth to Apple? You have Slack. I mean, there are real businesses that started with, hey, look, we can talk to each other on the internet. Isn't that cool? And that's kind of the phase that we're at right now is, hey, look, we can send each other NFTs. That's cool. And it's a stupid picture, but what can that be in the future? Um, I don't know. I don't know who the Slack is or the WhatsApp is in this situation, but they're out there.
Good point. Good point. Well, let's talk about something that I am going in completely blind here, but I know that you are excited about it, and I know that it's something that you wanted to talk to me about. But that's Altos. Altos? Altos? Um,
Aptos. I think
Aptos.
I have a Apple tends to correct my
Yeah,
when it's new words, they don't get the spell check
they
right.
don't like that. Okay, well, so I don't even know the name of this, but Aptos. You said it launched yesterday, and that this is the old Facebook thing.
Yeah, so this is the team that used to be building the Facebook. They had a number of names, but they were trying to build a
Yeah.
blockchain and a cryptocurrency at Facebook. And so they kind of like took that technology and made their own, backed
Hmm.
by a few $100 million from Coinbase Ventures and A16Z, Multicoin Capital, kind of the big names in crypto. Started trading yesterday. Right now is down 44% from where it started, but
The
does
currency.
have, according to CoinGecko, anyways, does have a fully diluted valuation of almost $8 billion. So almost worth more than Solana at this point.
Wow.
Um, Now that's
Okay.
based on these numbers. I I was trying to research this yesterday because I'm always skeptical about these new things, but this has got a ton of money behind it. What I know was yesterday they were doing because their mainnet is live. They're doing about 4 transactions per second. So that's kind of where the maturity of this blockchain is. It's not
Hmm.
very mature, and we didn't have a full tokenomics. Now
Oh.
tokenomics is something that uh, I always take with kind of a grain of salt. But if you don't know how many tokens are out there, you don't know who owns them, you don't know if more are coming to the market or sort of what the process is there, um, then what are you buying? It's like buying a stock and not knowing how many shares are outstanding. So
Yeah.
um, this is one that's getting a lot of attention, at least in crypto Twitter, and has a really high valuation. The reason that I wanted to bring it up is this is another project that I think is getting a lot of hype today and will get a lot of discussion this week. But if you think about something like Solana, there's a network effect on both the developer side. So the network effect would be more developers lead to more users, leads to more developers, leads to more users. This has happened over and over and over again in technology. And
Yeah.
the challenge for any of these new blockchains, you might be able to come out and say, like, we have better technology. But if there's no developers and there's no users, then who cares? Right? Isn't it Betamax was a better technology than VHS, but it
Yeah.
lost. I forget what the CD there was a
Blu-ray,
CD
right?
equivalent of that Blu-ray was worse technology than this other thing. This happens over and over in technology where the best tech doesn't win. The tech that people use wins.
Hmm.
And I wonder if we're past a point of no return with some of these where, there's so much built on Ethereum and Solana in particular. I think those are the two that have the most developers at this point. Um, are they going to move? People going to move to Aptos, to
Hmm.
Cardano, to Near? I don't know. But I think that's the challenge for all of these is not just saying, hey, well, you're doing 3,000 transactions per second. We can do 10,000 transactions per second. That's great. Can you get a million users? Can you
Hmm.
get 1,000 developers or 10,000 developers? That's going to be that's going to be the challenge. And so that's the grain of salt that I'm looking at this blockchain launch with, is that great, it's launched, but it's a really high value from an investment perspective. The upside on To me, the upside on Solana at a $10 billion value, market cap, for all of the tokens that are outstanding, and this one at an $8 billion market cap. I mean, that's a no brainer. That's like a
Hmm.
startup with this $8 billion market cap versus buying like an established company with a slightly higher market cap. You just don't. Okay, what would possibly be the upside in buying Aptos? So, that's my little rant. But I don't know. It seems more like a hype project to me at this point. But if people
I
start
mean,
using it, then I'll change my mind.
what's their claim to fame? Is it that they can be faster than Solana or more
Yeah, that's
secure?
that's the theory. I think all of these things are great in theory until they
Yeah.
actually get used. I mean, this has been the problem with Solana, right? Is like people are actually using it, and sometimes it breaks because they're pushing the number of transactions per second so far.
Well, and to me, that's one of the interesting things about Solana that, yes, I have been critical of that project because of how many times it breaks. But I think that that is also a sneaky bull argument for it
Mhm.
because it keeps breaking and, like you say, people keep using it. So what's going to get people off of Solana at this point? The whole thing has broken, gone down for 10 hours or whatever it is, and yet people are like wake up the next day and like guess we're still using Solana. Like what is going to kick them off of this network at this point if that doesn't?
Right. And I think the same case, I'm not very high on Ethereum, but I think the same case can be made for Ethereum. If
Yeah.
people are willing to pay $100 per transaction, then there must be value in that blockchain. It's not the kind of disruption and business models that excite me, interest me. But I don't know if you're into fine art and you're spending 10,000 or $100,000 on an NFT, or you're building a business where having $100 transaction is not the end of the world, is you're trading off costs for security, and that's a
Hmm.
trade off that you want to make, then maybe that's valuable. Um, but yeah, I think you're right. It's interesting what people will put up with. And again, this has happened over and over with tech, right? We didn't stop using Windows PCs because they got viruses all the time. Like we were just like, this sucks, but it's better than the alternative.
Yeah, well, what can you do? Yeah, very good. Well, speaking of Ethereum, post merge, it actually happened
The merge happened.
after, yeah, after literally years of talking about it. It doesn't look, I don't know, I haven't looked, I don't look every day, but it doesn't look like the price has basically moved at all since the merge. I mean, isn't it
Right.
just kind of hovering there? Uh, but what's going on with Ethereum? Is it post merge? What are we looking at?
One of the things I think that got missed in the merge hype was what the actual impact of the merge would be. And the biggest impact of the merge is that the blockchain is using less energy
Hmm.
from a user and developer standpoint, there's almost no change. Like gas fees are not lower, transactions speeds are not higher. There's no major impact if you are a user of Ethereum, except that when you put through a transaction, you aren't using as much energy as your house does in like a month in one transaction, using like as much as a Google search. But I think that's a little bit wrong, but on the right scale. Um, so I think that was kind of the merge happened, and then people were like, "Oh, that's it." There's no now there it could become deflation. The tokenomics could become deflationary because tokens get burned as more transactions happen. Again, that's kind of like this Ponzi-nomics that I don't really buy into, but that's a probably a bigger discussion for another time. But I think that's the takeaway, was that this upgrade was kind of a nothing burger as far as users and developers go, and that's why we haven't seen pick up, and we haven't seen NFT projects be built on Ethereum instead of Solana. This I think the shift of users towards Solana, if you look at the data, is still happening, and the merge didn't impact that. Now, what would happen is the surge, splurge, the purge, all these other things that are in the works. But you said, I think it was 5 years that they worked on the merge. When in the world is that stuff coming? If we knew that Ethereum was going to 100,000 transactions per second, either on its own blockchain or through these scaling solutions like sharding and all these other, and layer twos, great. But we're not there, and I have no idea when we're going to get there. And if we get there in 2030, then who cares? Like, other blockchains will be better and will have more users, and then this network effect that we talked about with Aptos, it will have by then run the opposite way for Ethereum. Would be my thought, is that people will eventually get fed up and go. I mean, look at the volume on OpenSea. There's more NFT trading going on Solana. So if you are into NFT trading, like, you most likely have shifted over to Solana at this point. If you're building a business and the volume is on Solana, then and that's lower transaction costs and faster speeds and all that stuff, then that's where you're going to move. You're going to follow the users and follow the money. This is network effects working. Um, so that's what I see, and I just question. I think it's probably something they had to do because Ethereum was using so much energy and gotten so expensive. But I don't know that it fundamentally changes my view of using that blockchain. It's still kind of a pain in the butt to use versus versus other blockchains, to be honest. So
Yeah, it's really really interesting from all the things that you just said. Also from just a price perspective, I think that a lot of people expected a huge spike in price because so many tokens were going to get locked up in the whole staking aspect of it,
right.
and to just see it just completely flatline in price, it's really interesting to watch. I don't know what that means. I don't know.
Yeah, and even that piece of it, I think, is interesting to just go through that entire process in your mind. So you think the price will go up because more people are going to lock their tokens into staking, and they're locking their tokens into staking to earn yield, and the yield comes from fees that users of the blockchain are paying
Mm-hmm.
to pay that yield to stakers. So what you're effectively saying is, you think more people are going to use the blockchain and pay higher fees to use the blockchain, so then I can make money from staking. And I think that's exactly the opposite. It's like the incentives are wrong.
I agree.
The incentives for Ethereum is for fees to be high. And if you're a user or a developer, why would you want to go to a blockchain where the incentive is for fees to be high?
Hmm. Yeah, and if you're hoping that people are going to use it, but you're also saying that we're building this so that the price goes up, it's hard to it's hard to get actual usage from a transaction point of view if people are viewing it as an investment that I'm holding on to because it's going to go up. It's
Right.
And a lot of blockchain or a lot of cryptocurrencies are that way. This isn't unique to Ethereum. I think it's one of those conundrums that people want the price to go up so that more people are interested in it. But if the price goes up, then it lowers the incentive to use it in many ways. It's it's a conundrum.
Yeah. And if all of those things aren't aligned, then I think this is one of the things that a lot of people struggle with Solana is like, what's going to drive the price higher? And my general thesis is like, well, it's like a currency,
Yeah.
right? So if people are using it and the money is flowing through the system, then the price will go up because people are using it and people see value. Why is the US dollar rising in value versus every other currency around the world? Because right now people want that more than they want, and they want to use that currency more than they want to use other currencies. So the same should hold for the blockchain
Hmm.
and cryptocurrencies. Again, maybe my simple mind uh, not understanding what everybody's seeing in this, but that's my general worldview.
Yeah. Well, I think that adding simplicity to the arguments is really important when we're talking about cryptocurrencies.
Yes,
Uh, Travis, anything else?
I think that's it. I think our live stream worked. That was challenge number one. We'll see
Proof
if
of
someday I
concept.
can get Twitter and LinkedIn on here live, but I appreciate you taking the time, John. This has been.
Yeah, you
Hey,
bet.
we used to do this once a week, and so
Exactly.
it's been fun to talk crypto again and try to pull you along in my excitement about things.
No, I was talking to somebody just last night. They asked what the biggest changes with my workflow at the Motley Fool was, and I said not a whole lot has changed, except I do not get the regular interaction, the back and forth with other people who are thinking about the same things that I'm thinking about. And there's a lot of value in that to be able to formulate your own thoughts and express them vocally instead of just written, but then
Mhm.
also to have that conversation where you're hearing other things that you haven't thought of, other sides of the coin, and that really rounds out an opinion in my belief. And so there's a lot of value to this. So I'm happy to sit here and spend some time with you on this live stream.
Well, I feel the same, and we'll have to do it again soon.
Indeed.
All
All
right.
right.
Thank you, John. I
Thank you,
guess I'll close
Travis.
it out here for the Rive
Okay.
project.
Yeah, it's
And
your channel.
John's upcoming channel. We'll
We'll
share
we'll
all the
have one at some point
we'll share all
before
that
I die.
when we get there. We gotta get John on YouTube. I want to hear more of your thoughts. Appreciate everybody who watches in the future, and we'll try to do more of these live as well. May have something from Vegas coming up later this week, so stay tuned for that. All right, thanks a lot.